Imagine a single building where more than 1 million companies are registered. Not in the Caribbean, not in Switzerland, but right here in the US. Welcome to Delaware, America's legal black box, where Wall Street, Silicon Valley means some of the world's most powerful and secretive business people park their money, dodge taxes, and play by a different set of rules. This is how Delaware quietly became the Cayman Islands of Wall Street, and why they're suddenly starting to change. Delaware is the second small state in the US, but it's home to more than 2 million registered business entities, twice its population. 2/3 of the Fortune 500 companies are incorporated here. Why? It's not the beaches, it's the law. Delaware's secret sauce is a century-old system. No state corporate income tax for companies that don't actually do business in Delaware. No sales tax, no tax on intangible assets like trademarks or patents. And crucially, almost total privacy. Owners' names are kept off public records with only a registered agent's address required. Here's how the Delaware Loophole works. Say you're a Home Depot, headquartered in Atlanta. In the 1990s, Home Depot set up a Delaware subsidiary called Homer and transferred all of the trademarks there. Every Home Depot store in America then paid royalties to this Delaware company for using the brand. Money that was tax deductible elsewhere, but untaxed in Delaware. Billions in profits shielded from state taxes. This isn't just for big brands. Delaware makes it easy for anyone to hide their assets, to avoid taxes, and move money with almost no questions asked. And check it out, Delaware's appeal isn't just about taxes. The Court of Chancery, a specialized business court with expert judges, means fast, predictable rulings. Flexible corporate statutes let founders, VCs, and boards write their own rules. Investors absolutely love it. Venture capitalists and investment banks often require startups to incorporate care before they'll even invest. Want to keep your ownership secret? Delaware doesn't require shareholders to be listed publicly either, making it a go-to for anyone seeking privacy, legitimate or not. But with secrecy comes risks. Delaware's system has made it a magnet for everyone from white-collar criminals to corrupt foreign officials. Paul Manafort, Victor Bout, Timothy Durham, the list of fraudsters and money launderers using Delaware shells is endless. Even gun smugglers and human traffickers have exploited this legal black hole. Researchers found it easier to set up an anonymous shell company in Delaware than in almost most Caribbean tax havens. No ID checks, no questions asked, just pay the fee and you're in. The Delaware loophole doesn't just hide money, it drains billions from other states every year. States lose out on revenue that could fund schools, roads, and healthcare, while Delaware rakes in over $2 billion annually from corporate fees and taxes, more than any other state. But Delaware isn't a magic bullet for everyone. Small businesses still have to pay taxes in the states where they actually operate. Filing fees in Delaware can be much higher than elsewhere, and annual franchise taxes can balloon as your company grows. For many, the costs outweigh the benefits. For decades, the Delaware's courts were seen as business-friendly. But that changed in 2024 when a Delaware judge voided Elon Musk's $56 billion Tesla pay package, calling it unfair and improperly approved. Musk's reaction? He pulled Tesla and SpaceX out of Delaware and reincorporated in Texas, sparking a wave of exits by companies like Dropbox, Pershing Square, and possibly even Meta and Walmart. Suddenly, Delaware's reputation as a corporate paradise was in question. Lawmakers scrambled to update the rules, passing new bills to appease executives and investors. But the damage was done. Other states like Texas and Nevada are now competing hard to lure America's biggest companies. Delaware's courts have become more willing to scrutinize board decisions and hold executives accountable, especially on issues like excessive pay and corporate oversight. Some say this is good for shareholders and transparency. Others warn it's driving companies away, risking Delaware's century-old dominance as America's corporate capital. Delaware's government is now racing to keep its crown. New bills are here to aim to reassure CEOs, but critics warn those changes could weaken shareholder protections and transparency. Meanwhile, other states are offering even looser rules, hoping to become the next Delaware. At its heart, this is a story about legal corruption baked into the American system, where the rules are written to attract money, not always to protect the public. As companies, investors, and even criminals look for the next big loophole, the question is, will Delaware adapt, or will the shadow banking system just move somewhere else? Delaware's story isn't just about tax tricks or corporate law. It's about how the rules of capitalism get written, who gets to play, and who pays the price. The next time you see a company's headquarters listed as Wilmington, Delaware, Remember, behind that address could be a billion-dollar empire, a shell company, or just another chapter in America's financial shadow game.